Good afternoon, traders and investors. Happy Friday to everybody and happy end of the year to all you traders and investors out there. It has definitely been a very good year indeed. And we had a little bit of a red day to cap it off, ending the last trading day of the year. So today's video, guys, we are going to go over our major indexes, see how everything stands. We're going to go over our major tech names. All the monthly charts are going to be included as well. See how we close the month of December and if it can lead into bullish 2024. We're going to be also covering my portfolio and see how I wrapped up the year as well. So without further ado, guys, let's get right into today's video. SPY down 0.29%, QQQ down 0.43%. But ending a very beautiful week, a 9th consecutive week of green in the markets here, guys. And this is a heck of a record here, guys. S&P 500 eyes 9th week of gains, longest streak in 2 decades. This is the largest rally, guys, since 2004 in terms of your weekly gains on the market. So with these record settings, we know that we are potentially due eventually, very soon, for a couple of red weeks. And that's kind of what we've been forecasting on the channel here for the past week or two, is that early January may mark some profit taking from institutions and retail. So don't be surprised here if we do get a slight little pullback, but in my opinion, a healthy pullback is needed nonetheless. So without further ado, guys, let's check into the heat map as well. So in broad market performance, guys, yes, the market was red today pretty much across the board. You can see all major sectors, except for healthcare, pretty much pulling back on the day. Broad market was just the same here, guys. Everything pretty much pulling back ever so slightly. So no real very red stocks in the market here today in terms of our big names, but everything was kind of just slightly down, right? Just a slightly red day on everything except for healthcare. Healthcare did have a bit of outperformance, but our major tech and financials were indeed down. On the one day relative, you can see that everything pretty much in the red except for about consumer defensive stocks here. Right. And on the 1 week relative, you can see that everything is still relatively healthy indeed. 1 month relative too. Everything is looking very good for your last month's performance. But this is where we have to be a little bit cautious in the markets here, guys. This is where the markets may hit us up with a bit of red leading into the new year. That is the narrative that I am going to stick to. We don't have CPI for the next 2 weeks. We don't have Jerome Powell for the next 4 or 5 weeks. So we may just be due for a bit of a technical pullback. But let's focus on the gains here, guys. This year was an absolute outstanding year, especially for your big tech names here, guys. So look at the performance of big tech in 2023. Apple, 49% gain on the year. Microsoft, 56.5% gain on the year. Google, even 59%. Amazon, almost 83%. NVIDIA, absolutely crushing it from the lows, right? 239% to the upside with the new verticals and sales metrics here that they're attacking in terms of data warehousing services. And now Meta Platforms as well had a very beautiful year as well, almost up 200% from the lows after Mark Zuckerberg led his year of efficiency. They cut about 20,000 employees and really got back to the basics for Facebook here and really putting their metaverse projects to the side, cutting a lot of costs in that respect as well. And Tesla up 105% as well. So your magnificent 7 really outperforming the broad market here, right? In terms of the indexes, though, indexes had a very beautiful year as well, right? So here we go again with the headline. Tech stocks just wrapped up one of their best years in the past 2 decades after 2022 slump. The NASDAQ climbed 43% in 2023, one of its best performances in 2 decades as well. So a lot of records here. Similar to the rallies in 2009 and 03, the NASDAQ was coming off a brutal year for investors, which was 2022, was very bad for us, right? And now the year's bounce back was led by huge gains in chipmaker NVIDIA and Facebook parent Meta, which is exactly what we just saw, right? So in terms of how your index is finished here on the year, guys, you can see SPY year-to-date gain almost 24% to the upside. QQQ year-to-date gain as a whole 52.5% to the upside here, guys. And although we're close to we're past the all-time highs on the QQQs and past the all-time highs as well on your NASDAQ 100, which is your top 100 performing NASDAQ stocks. The actual NASDAQ, which is comprised of around 3,700 stocks, that is still relatively decently off the all-time highs by about 7% here. So not everything is at your all-time highs. SPY has not yet touched the all-time highs, very close, but not just yet. So very, very good year as a whole for all of your indexes here, but we do have a bit of underperformance as well. You can see it right here in terms of the Russell, right? Russell underperforming SPY year to date. Russell still significantly off the all-time highs as well. We're talking about pretty much 18% off your all-time highs. So there are still going to be some deals coming into 2024, some stocks that have still underperformed the market. And our job as traders and investors is to find those beautiful companies that have potentially got hit with a bit of cyclicality and try to make a play on them for some mean reversion, meaning for them to catch back up to the indexes. So with that introduction complete, guys, let's get right into our technical analysis of our major indexes here and see how we closed everything. So SPY, red on the day. What were we looking for yesterday and pretty much all week? Any move lower from our most recent rally up is just for a higher low above 468, right? For a higher low for further trend continuation. But if next week and the next 2 weeks, first 2 weeks of January, we get a bit of a sell-off, lose the daily uptrend into daily consolidation, just looking for a weekly higher low. And after 9 weeks, guys, you saw the headline, 2 decades. We haven't had a rally like this since 2004, 9 green weeks in a row in SPY and QQQ. So maybe due for a little bit of a pullback. If we do get it, anything above the 454 area is just going to be for a higher low for further price continuation here into 2024. Going to be due for some very healthy consolidation. And in terms of the monthly, guys, the monthly looks absolutely outstanding. This is a monthly cup and handle, guys, which is just now breaking bullish. Monthly uptrend is well confirmed. Strong close in December here. So if we do get a little bit of pullback here in January, I do expect it to just be a little bit of a wick candle. We may get a little bit of pullback early January, but I do believe the end of January should be strong. So if we do get a little bit of a pullback into the end of January, I think the candle is probably going to look something like this as well, right? Little bit of a doji candle to the upside. On the monthly, everything is looking very good. Bulls are in full control of SPY. Now moving on to QQQ, same thing, guys. Anything pretty much above 403, any move lower off of this most recent move higher was just going to be looking for a higher low. Anything above 403 is just going to be looking for a higher low here. The bulls kind of losing a bit of ground here, losing that 12-hour, that 4-hour 12 EMA that we've been talking about this whole time, right? So bears have been in control of this today. If they do set the 4-hour downtrend and continue moving below these moving averages on the short-term time frames, your daily consolidation is underway. Then you look for the line in the sand level on the daily. If they crack that and set the daily downtrend, well, it will just be for very healthy weekly consolidation. We will move down off the all-time highs, which we're currently right now, previous all-time highs, and anything on the weekly above 384 area just for a higher low for further price continuation into 2024. Very healthy weekly uptrend. Any pullback just for a higher low, further price continuation. On the monthly, even same thing as SPY. Beautiful cup and handle formation, guys. It's a very, very bullish pattern indeed. And you do have the confirmed monthly uptrend at this point. So everything looking very, very good. Same thing as SPY. If we do get a little bit of pullback, I'm expecting early pullback in January, potentially some profit taking, and then another green candle to the upside here because the momentum is very, very strong. So that is going to be the narrative that I'm going to stick by. In terms of XLF financials, XLF healthy, pretty much down 0.32% on the day. But same thing, guys, after this beautiful series of higher highs and higher lows, the bulls are still in a daily uptrend. The line in the sand level, 3690 is going to be the area to watch, right? Any move lower, looking for a higher low is the most probable scenario for further price continuation. But if ever we get too much of a sell-off, early profit taking here into January, well, just look out here for your daily downtrend that would be set, and then you'd be looking for a bit of weekly consolidation. Weekly consolidation could take us down into this 37, 36 range, but it's going to be very tough for the bears to break this previous resistance area, which is now going to be very, very big support. And on the monthly, guys, monthly is looking absolutely amazing here. After this big consolidation range, you finally have your monthly breakout. This is now a confirmed monthly uptrend at this point. So I do believe that we are due for some further monthly uptrend continuation here. January, February, March should be able to bring us into the previous all-time high range, which is 40.41 on financials. Financials looking very good for a recovery in 2024 with diminishing interest rates. Now, XLV Healthcare. XLV Healthcare, actually one of our green spots in the market. And that's what we've been talking about over the last 2 weeks, right? XLV has been so muted this entire year, guys, with financials that it's very good to see them rotate. When QQQ takes a couple days off, it's good to see that healthcare is still rotating the upside. So healthcare trying to recapture the daily uptrend here. Any move lower from this point is just going to be for a higher low, anything above 132.70, higher low for further price continuation. If for ever which reason we lose the series of daily higher highs and higher lows, the weekly has tons of space to get back onto, right, and use as support. Target the lower area of this entire consolidation range between these two yellow lines. That's going to be your 133 mark. And then right below that, we do have our moving averages curling up. So if we do start curling down in here, the moving averages are going to catch up. We're going to have a beautiful confluence zone right here for a potential higher low for further price continuation on the monthly. Monthly is looking very good as well. Still in this beautiful tightening range right here, but with a very bullish lean. So we will eventually need a crack of this 136.50 zone, right? If you can close above this 136.50, you're really setting yourselves up, guys, for a nice, beautiful monthly uptrend breakout, and also really setting up nicely for a breakout, retest of this zone, and potential break to the upside, confirming the weekly uptrend. So everything looking very, very, very healthy across the indexes. But keep an eye, first 2 weeks of January, maybe some early profit taking. IWM Russell leading the way to the downside here today, 1.63% to the downside, and I'm looking for a weekly pullback on the Russell, guys. I want to initiate some positions here off of a weekly pullback and be looking for a weekly higher low for further price continuation. That is going to be one of the trades I'm going to start initiating here early in January. I do believe growth stocks are poised for a very good year in 2024. So daily uptrend is still confirmed here, still looking for a higher low, anything above 196, looking for a daily higher low for further price continuation. But if the bears take back too much of this move, set the daily downtrend and lose this level, you are now into weekly consolidation. Target the bottom end of this range here, 194.73 is going to be the target. Going to be tough for the bears to get much ground in this range. It's going to be used to be previous big resistance, should be acting as some pretty decent support, right? We're just looking for the breakout here, the retest of the area for a potential second weekly move higher. So everything looking very, very good on the Russell here, even if we do get that pullback. And on the monthly, guys, monthly breakout with a December close is now pretty much confirmed. So even if we get a little bit of pullback here early January, right, we get a little bit of a doji candle, something like this, with a little bit of a tail on the bottom, doji candle like this is what I'm expecting for the month of January across your monthly timeframes here. Could get a little bit of a pullback early January, and then should be able to close January fairly strong as well. The momentum on this chart is very, very good. You can even see the monthly MACD, and this is, I don't really check the MACD that much, but I have it pulled up here just in terms of your higher time frame reversions here. So I do believe that we do have a nice reversal pattern forming for the Russell here and due for some monthly upside continuation as well into 2024. Looking forward to following this chart. But as I said, guys, if we do pull back here in the mid 190s, I will be loading up some positions on your TNA. TNA is your 3x levered small cap ETF that tracks the Russell. So looking forward to initiating some plays on that. And now lastly, our Dow Jones. Dow Jones still kind of hovering around the all-time highs, just grinding here is the Dow Jones. Down only 0.05% here today, not that big of a day here. But if for ever which reason, guys, we lose the series of higher highs and higher lows here, right, we're still looking, any move lower is just going to be for a higher low above 37,071, right, looking for this for the continuation of the daily uptrend. But if we get some profit taking, keep in mind, we are overbought on the Dow Jones still. It is a little bit of bearish divergence, right? You can see the lower highs on the RSI and the higher highs on the chart. That is bearish divergence. Usually that does lead to a slight decline in price until this divergence pretty much converges away here. And so if ever we lose the series of daily higher highs and higher lows, target this area, guys. This area is going to be your previous all-time high area of support, 36,900 all the way down to 36,400. Decent little retest area, right? You got your weekly breakout, got the weekly retest potential zone here into early January, and then we might move north into end of January as well. On the monthly looks absolutely amazing. This is a very, very nice confirmed monthly uptrend. Monthly chart is looking beautiful. Strong candle close through the all-time highs, guys, which is why I'm expecting, once again, if we do get some profit taking early January, should be able to end the month fairly positive here, expecting, once again, doji candles to look like this, right? Little bit of profit taking early and then closing the month strong. That would be my expectation for the Dow Jones as well. Dow Jones looking excessively healthy, guys. So just keep that in mind. Now, let's move down, guys, to a bit of crypto here. Get the monthly closes in. So Bitcoin, not much has changed since yesterday's video, still in this massive tightening range here on the daily. So daily chart doesn't provide us that much info. What provides us more info here is the weekly chart, right? Beautiful weekly uptrend. And now we have a weekly bull flag. So we're going to be looking with a bullish lean to this bullish flag to complete north to the upside. If for ever which reason the bulls lose this area and continue setting daily downtrends and flush your 40,500, 40,400 range, well, you would have lost this potential weekly bull flag here. It will turn into a potential weekly downtrend at that point, and weekly downtrend would just mean you're in for monthly consolidation. Monthly candle closes on Sunday on Bitcoin, so we'll see how it goes. But if ever we are in for a bit of weekly downtrend here into monthly consolidation, that's fine. Bitcoin has a lot of area to give. Anything above 25,200, just looking for a monthly higher low for further price increase into 2024. Big halving event, ETF, which may be a sell the news event, but the halving event is definitely going to be a buying opportunity for a lot of your Bitcoin bulls. And I'm expecting very big things out of crypto into 2024 as the pivot to risk on assets continues. Now, moving on to Ethereum. Ethereum with another little down day here today. So still in this daily uptrending pattern, but your line in the sand level 2183, still just looking for a higher low above 2183 for further price continuation to the upside. But for every which reason the bears take back too much, open up the door for the daily downtrend, that will mean that we may potentially be due for a bit of weekly consolidation at that point, right? At that point, guys, target this area right here, 2113 all the way down to 1951. In terms of the monthly, guys, monthly on Ethereum is looking exactly like Bitcoin. Beautiful monthly uptrend breakout right here. So if we do have a little bit of a weekly downtrend formation that does occur, if we come back into this area, that's fine. It'll just be a bit of monthly consolidation. Very healthy. Anything above 1525. Just looking for a monthly higher low on Ethereum for further price increase. And this area is going to be this area between these two yellow lines, going to be very tough for the bears to break through that, in my opinion. So everything looking good, just a little bit toppish here on most of crypto here, which is why we've been struggling a little bit. Still has a bit of a bullish lean, but if it does break bear with the rest of the market, potentially, I would not be surprised. And it would just be healthy consolidation. Very good buying opportunity, in my opinion. Now, moving on to big tech here. Apple giving back pretty much all of yesterday's gains here. So as I was saying, guys, need to measure the size of the bounce. And the bounce was pretty much only one day. We were looking for a bounce to get as high as 197.57, right? The previous high, but it only lasted one day, and now we're back towards our lows. So further continuation to the downside at this point could be expected. Your flush zone is 191.20, flush 191.20. The daily downtrend simply continues, and then we look out to the weekly, guys. Weekly level is going to be very important here. 187.80 on Apple is going to be your area. Weekly uptrend was confirmed by Apple. Now, if we lose this area, right, you open up the door for the possibility for the bears to potentially set either a weekly downtrend or, at the best case for the bulls, set up somewhat of a tightening range before potentially proceeding more north here. So Apple, not looking the worst right now, but just need to recapture some of these short-term daily timeframes. The problem is this weekly move, this second weekly leg up was very, very short. We struggled at the all-time high, didn't want to break it, then Apple got hit with the negative watch catalyst as well. So really area to watch out for, 187.77. If for whatever which reason we pull back here into the lower mid to 180s, I will definitely be a buyer of Apple in that zone. Apple on the monthly, right? Apple had the monthly breakout pattern going for it when it cracked the all-time highs, but you can see month of December kind of pulled back ever so slightly. So if we do get a bit of profit taking, guys, and we lose this 187 area as well, right? Continued daily downtrend potentially into January, and we may lose this weekly level as well, which could send us into weekly consolidation. Well, you may just be in for a bit of a monthly tightening range. And Apple has done this a few times where they've been in a beautiful monthly uptrend, but they've consolidated at the all-time high, right? See right here, consolidation sideways a bit before breaking out, may just be due for a bit of sideways consolidation. So we'll see how that short-term price action lines up. But my sweet zone for Apple is pretty much 183 all the way down to 176. Get back down there, and I will be playing more Apple positions. Now moving on to AMD. AMD pretty much ending strong here, down 1% on the day, but very strong end of the year here, guys. I'll show you that on the longer term timeframes. So beautiful uptrend is in motion. We are now expecting a little bit of a pullback. So any pullback is just for a higher low above 135.34. Looking for a little bit of a pullback, higher low for further trend continuation. But if the bears take back too much of this move, set up for a daily downtrend, that's fine. Your weekly consolidation will be underway, and the bulls have tons of space. Anything above 116.70, just looking for a weekly higher low for further price increase into 2024. If ever which reason we get close to the mid 130s, 135 down to 130, I will be playing more options on AMD. A bit too extended for me at this point. So we have to see how that's going to go leading into the next few weeks. In terms of the monthly, look at this December close. So strong here, guys. Monthly uptrend, beautifully confirmed by the bulls. November and December really cracked our previous 52-week highs. So even if we do get a bit of weekly consolidation, guys, this monthly chart shows you that all weekly consolidation, daily consolidation is just a buying opportunity for continued monthly uptrend here. So even if we pull back slightly in the early January, I do believe we are poised to continue this march towards our previous all-time highs. Guidance is absolutely amazing. AMD not with earnings before the end of January, right down here, right? January 30th is going to be the date for earnings. So just keep an eye on that. AMD slightly overbought on the daily here, so a little bit of a pullback would be expected, but just watch how much of this area bears are able to take back. If they take back just a little bit of it, start moving higher, daily uptrend should continue. But if the bears take back too much early January, maybe setting up for the daily downtrend, maybe setting up for some needed weekly consolidation here after another 4 weeks of weekly uptrend here, right? So may just be due for a little bit of consolidation before weekly leg up number 3. Now moving on to Amazon. Amazon looking fairly good, even though they pulled back here today, still really tight at the top end of this range right here. So we were monitoring the breakout of this zone, finally got the breakout here, beautiful daily uptrend, monitoring this daily bull flag, but now with the market pulling back, Amazon was not safe from that, still holding defense at this 12 EMA. So we'll see how we open up next week, but Amazon here still looking good here, guys. Yes, we are forming right now a little bit of a daily downtrend, but on the weekly here, guys, it's just going to be a weekly bull flag in my opinion, right? Beautiful breakout here. Weekly uptrend is confirmed on the weekly targets. Anything above 143 pretty much just going to be for a weekly higher low for further trend continuation. If ever we get further extended daily consolidation, it's going to be very tough for the bears to break through this zone, guys. Previous 52-week resistance, chop zone right here, right? Going to be very tough for the bears to flush through this. I am expecting just a weekly higher low for further trend continuation into 2024. Even if we do get a couple more weeks of red, don't think it's going to be too aggressive on Amazon. Amazon still representing some good risk reward in terms of percentage off the all-time highs. Still about 18-19% off the all-time highs here, guys. And price to earnings ratio is a bit high here, but they are increasing EPS very substantially over the next year here, guys, right? So you'll see this EPS is actually coming back fairly nicely for Amazon here after having a bit of a consolidation year in 2022. They had a lot of capital expenditures with new warehouses and whatnot, but they've really been doing a good job over the last few quarters of bringing those short-term and long-term costs down. No further capital expenditures for the current year. So this year should be all about rebuilding that EPS. Amazon, one of my favorite plays for 2024. And on the monthly here, guys, you can see monthly breakout uptrend is in full upswing motion right now. So the monthly is looking very healthy indeed. No red flags whatsoever. I am expecting a continuation of this monthly uptrend. Bulls are in full control here, guys. Bulls control the monthly. They control the weekly timeframes as well. Just the daily struggling ever so slightly here, but still relatively strong here, guys. Considering the rest of the market, how much the rest of the market can pull back, Amazon has really not pulled back off of its most recent highs by too much. So we'll be keeping a very close eye on this. More specifically, this range 148 down to 143. If we do dip down back here, that will be a very big buying opportunity for myself for some short-term put options. Now, moving into Google. So Google, guys, Google pulling back ever so slightly here today, ending under the 141 level here, but we were just expecting a little bit of a pullback here, guys. I was forecasting this, right? As soon as this move tops out here, just looking for a daily higher low, anything above 131, looking for a higher low for further price continuation to the upside here. Daily uptrend well in motion. Keep an eye, guys, this area between these two yellow lines right here, 140 down to 138, going to be the sweet spot. Why? It was so much resistance in the past for Google, so I am expecting it to act as a bit of support. Weekly bulls are in full control as well here, guys, right? Any pullback, just looking for a higher low, anything above 129.30, looking for a bit of a higher low. So Google, even if Google does decide to pull back a bit more here into the early few weeks of January, that's okay. Just looking for a weekly higher low here, bit of consolidation before a future price increase into 2024. In my opinion, very bullish guidance for Google into 2024, looking very good. And with the month of December close, your monthly breakout is fully confirmed at this point, looking very good for some continuation here into the months of January and February into pretty much your all-time high area. Very curious to see Google's earnings. They should be good. That's coming out really early February at this point. But bulls in control of everything, guys. Still in control of the daily uptrend at this point. Still in control of the weekly uptrend too, and still in control of the monthly uptrend. So no red flags on Google whatsoever. Pullbacks are pretty much still for buying leading into 2024. The bulls control all of your higher timeframes. Now moving on to Meta. Meta also with a little bit of a pullback day here today. So we were talking about this pretty much all week. As soon as this move tops out on Meta, well, you're just looking for a higher low, anything above 329.75, looking for that daily higher low for further price continuation. Look for this area right here, 341.50, going to be pretty much horizontal support at this point. You do have your moving averages there as well. So expect bulls to use that area as some short-term short-term support. If for whatever which reason we lose the series of daily higher highs, higher lows into early January profit taking once again, and they set the daily downtrend, that's no problem at all. We have some very beautiful previous resistance zones right here, right? 325 all the way up to pretty much your 335 area, big chop zone, and the bulls are in full control at this point at the weekly uptrend. Any pullback on the weekly just for a higher low above 314. Tons of space for the bulls to take a few weeks off on Meta if they want to set the higher low for a move higher here. Meta as well on the monthly looking very bullish. Monthly breakout pattern is well confirmed at this point. And with the monthly momentum and the weekly momentum at this point, I wouldn't be surprised here if in the next few months we are grasping near the all-time highs for continuation here of this beautiful monthly uptrend. Meta bulls are in full control of everything, so keep an eye on your short-term pullbacks here, guys. My sweet spot for Meta, I know the box is down here. I may as well move the box up here. This is my true sweet spot, but if for whatever which reason we pull back 325 down to about 300 zone, I will be looking to play some options on Meta. That includes if ever we come down to 340 and I can find some short-term puts here in the 330, 325, I may just be writing those as well. Now moving on to Microsoft. Microsoft looking very decent here. While the entire rest of the market was pretty much red here today, we got a 0.2% green day on Microsoft. So you can see really protecting this tight range here with the bullish lean here, guys, trying to stay above your 12 EMA here on the daily time frame. So once again, guys, stays put 377 down to about 364 is your short-term range. Break this to the upside. The bulls have a new daily uptrend, and your weekly higher lows are set at 364.50 area, right? So we're looking for a break of this zone. But if for whatever which reason there's some profit taking in early January and we lose this area here, guys, well, Microsoft would be one of your first tech names to set a weekly downtrend. So Microsoft and Apple would be the two ones that have the closest probabilities of setting a weekly downtrend. Still, nothing is confirmed. We could just continue rocketing into January, and I would not be surprised. But if we ever get a pullback here, guys, we're trying to find buying opportunities. So keep an eye on this. If for whatever which reason we lose the daily downtrend here to the downside, that would be potential weekly confirmed downtrend at that point, and target this area, guys, 355 to 340. I've been saying this for the longest time at this point, this entire consolidation zone, 355, 340, previous all-time highs, previous all-time high resistance. It's going to be a very big area of support as well. And even if we do get the weekly downtrend here, guys, no problem at all. Microsoft has created so much space on this monthly breakout here, guys. The month of December has just closed with a doji candle looking a bit like this. Sorry, you can't really see it, but it is pretty much a doji candle. So that does pretty much hint for some further continuation. Is a very bullish close in my opinion still. So even if we do pull back ever so slightly here in early January, it would be a monthly bull flag, similar to how this was. Monthly bull flag potential here into 2024 continuation. Monthly breakout is very beautiful by Microsoft here. The weekly is looking good. And obviously to the upside here, guys, if we do get that daily confirmed uptrend, well, just your weekly higher lows are set. Then looking for the break of your previous all-time highs up here, looking for the continuation of this beautiful weekly uptrend, and your monthly uptrend simply continues just like that here, guys, right? So we're just forecasting for the worst case scenario for Microsoft. That would be a buying opportunity down here for me. Now moving on to NVIDIA. NVIDIA looking fairly good, all things considered here, guys. Ended flat on the day, but still, pulled back all the way to 487 and pulling right back up towards the end of the day. So fairly decent price action, but NVIDIA is still kind of stuck in this all-time high range, right? So still in a daily uptrend, technically, right? Had the daily higher low pretty much set today here. So now can they just continue to confirm this daily uptrend right here? Really stuck in this price range. I don't really like it that much on the daily. Line in the sand is still pretty much 41.19. Lose 41.19. Daily downtrend is set. You have a bit more weekly consolidation underway here. The weekly shows it best here, guys. What are we looking for? Looking for continuation of this weekly uptrend here. If for ever which reason we do get a daily downtrend with some profit taking in early January, well, keep an eye, guys. 450 is going to be crucial. Need to protect 450 to protect the potential of a tightening range. Would like to see a tightening range at the top here for NVIDIA. They've done this a couple times here where they were in a beautiful weekly uptrend at this point and then kind of just tightened up for a few weeks before moving higher. So we'll see if they do that here as well. Just keep a tightening range before moving higher. If ever we lose 450, well then your weekly uptrend is lost. The bears will have set the weekly downtrend and you will just be in further monthly consolidation for NVIDIA. Monthly is looking very healthy, guys. I like to see a monthly close near the high of the range here, but still we are not fully broken out into a confirmed monthly uptrend on NVIDIA yet. It's pretty much coming over the course of 2024, guys. I don't have any doubts about that, but Currently, still just stuck in this monthly range between about $500 and $400. Still need to confirm that breakout. Bulls looking very, very strong on the monthly though. Weekly is still in a bullish uptrend as well. And the daily here, guys, the bulls are still in control. So bulls are in control of everything on NVIDIA, guys, but nothing is, they would be, right? If they break the all-time highs, they confirm all of the longer-term patterns. You confirm your monthly uptrend. You confirm your weekly uptrend breakout as well, and you really consolidate the bull strength on the daily as well here. So all-time high area is going to be crucial for multiple time frames. But even if we pull back here, guys, the bulls are still very, very healthy, guys. That would just be healthy monthly consolidation here, tightening monthly range. And if we do pull down the 450 area, I maybe even be adding a few shares myself. Now moving on to Tesla. Tesla, after breaking out, Tesla really coming down hard, right? So after that breakout, Tesla down 6.6% in 2 days, really only gave us a glimpse of the breakout and now pulled right back down into pretty much range-bound territory, right? So the daily uptrend was confirmed, but now the problem is the bears have taken back too much of this move in relation to your low here, 247. So now the expectation, guys, the best case scenario for the bulls could just be a potential tightening range, but we have a catalyst. We have deliveries here early next week. So deliveries is the only thing that, if they're good, could really V-shape this back. Probabilities wise, when you see a move come back this much from a previous bull move up, the probabilities state that you usually end up in a tightening range at best case for the bulls. Worst case is a lower high and then lower low for a bearish downtrend continuation. So deliveries are going to be pivotal for Tesla at this point. They could send us back up to the high and really erase these 2 days of trading, or they could really propulse us down to new lows here, which would erase your daily uptrend, potentially set up for a daily downtrend further into this previous range accumulation zone, 247 down to about 230, which we were stuck in, right? So on the weekly, how are we looking? Weekly not looking as bad here, guys. The weekly higher low is a lot lower, right? So weekly uptrend is still confirmed at this point. If we do get a little bit of a pullback here in early January, anything above 228, still just looking for a weekly higher low for further price continuation into January. Tesla, one of our first companies to be reporting here, 22nd of January, about 3 weeks away. So we'll see how they deal with that, but really not pleased of how much the move Tesla has taken back. If we do get bad deliveries, sending us into the lower 240s, 230 area, guys, that is when I will start writing puts on Tesla again, 230 all the way down to 220. My sweet spot for the company, this big green box, is where I will be looking to make juicy entries with some options on this stock. So deliveries next week is going to be pivotal for this company as a whole here, guys. And obviously, if we just continue our move north with with good delivery output here, well, your weekly uptrend will just continue at that point, and we're targeting 269 first level, 279 second level of resistance. On the monthly close here, guys, monthly is still just looking for a continuation of the monthly uptrend. Don't like to see, if these 2 days didn't happen, guys, this whole monthly candle would have ended very bullish green near the top of the candle, right? But with their 2 last trading days, right, we are just looking for continuation of the monthly uptrend here. But if the bears set a lower high right here, could just be due for a bit further consolidation as Tesla continues to deal with high interest rates and a bit of cyclicality in their business. So monthly, not showing the best picture. I don't like how much of this bull move up, right? The bull move up, the bears took back. If you put the fib on it here, right? They did take back a considerable portion of the move, 618 exactly here. So at this point, guys, the bulls still do have an opportunity to really V-shape this, but you would not be surprised either if they just set a bit of monthly consolidation here as well. Deliveries and earnings are going to be absolutely crucial for how we break out of this range, right? Whether we continue to get back down, stuck in this range here on the monthly and the daily, or whether we really start breaking out to the upside and really start recapturing here, guys, this monthly uptrend as a whole, start moving back up to your $300 mark. Deliveries and guidance in this Q1 is going to be pivotal for Tesla for the next 12 months, especially in terms of the fundamentals and the technicals alike. But I like the stock here, guys, 230 down to 200 indeed. Now, moving on to Palantir. Palantir with a bit of a weekday here today, but still not flushing our lows here, guys. 1705 is the line in the sand level here. So need to pay very close attention to this level here, guys. Daily bears are in full control at this point. The bulls try to get them back, but daily bears are coming back with a vengeance here, guys. So trying to set the daily downtrend, not looking the best here on the daily time frame here. Still a little bit of wiggle room here, but the bulls just not showing up here, guys. In the past couple of weeks, the bulls have really just faded away here, and that's kind of playing into our potential here of a loss of your 618 level on the fib here, guys. Lose the 618 level here, guys, and the bulls are not going to be looking healthy. You're going to be talking about potential a tightening range here at best, and at worst case scenario, a weekly downtrend set here by the bears here, which could bring us down here all the way into your lower $16 to $15 range. Right, so we're really going to be paying close attention to our earnings coming out early February. Still a bit of a ways away, but Palantir not looking the strongest, if I do admit myself here, guys. So really just target these lower areas. If we do break down from our 17 area, well, you're going to have to look lower a bit. And the next target for me here, guys, is going to be previous area right here. Is going to be, you see it best on the daily chart here, right? It's going to be really your $16 area is going to be your first level that we're going to be targeting all the way down here. 16 to 15 is going to be a very, very big area. And that would also be pretty much your gap fill area since last earnings. So bulls need to turn it around here, guys. Need to see an engulfing move by the bulls if you want to start changing up these time frames. But as of now, bulls have lost the daily, are in jeopardy of losing weekly momentum as well for your V-shape. Could just end up setting at best a tightening range for a further breakout. And on the monthly here, guys, monthly December month was a month of consolidation for Palantir as well. So monthly consolidation just continues. We're not able to close. I was really bullish, really hopeful for Palantir to really close this monthly uptrend into December with the momentum from November, but not giving it to us here, guys. Really just consolidating back into this range here. So it may take a little bit more time for Palantir to break out, but I am fairly bullish on the company. So all of this consolidation just does provide us with a bit more buying opportunities. And now lastly, PayPal. PayPal not with a very good day at all, right? So this bull flag here actually is starting to kind of break bearish. So that is not what you want to see here, guys. Still roughly in our consolidation zone though, if you put it on a sideways pattern, right? $64 all the way down to pretty much your low right here. 60.91 is going to be your area of consolidation. That's going to be the line in sand level for me. Lose this, you kind of lose your daily uptrend. You would be in a little bit of a daily downtrend. And at that point, guys, we're going to be looking a bit lower here for some weekly consolidation, right? So weekly consolidation would not be surprising at this point. Palantir has put in a succession of very beautiful weeks. But if for ever which reason, guys, we get a bit of weekly consolidation, it's fine. We've engulfed a lot of this move. So now I'm looking for the bulls to hold the higher low here, right? So looking to put in a higher low, $59 to $58 level is going to be the area that I'm watching for a weekly higher low. Really need to hold this 12 EMA right here, guys. Hold the higher low here and push higher, continue this weekly uptrend, move into the $65, $66 area, guys, which will really be a true engulfing move of this whole weekly downswing, right? And even on the monthly, guys, the monthly on PayPal, 2 months of upside, but just not enough here, guys. Your true monthly engulfing move would really come if we got all the way to $76. Then you would have potential for a monthly engulfing move. Need to get back above these monthly moving averages. Good progress on PayPal, just not enough for me here, guys. So we're going to be really looking for them to provide some good earnings, good guidance into your lower rate environment. PayPal obviously affected by interest rates. But on the short term here, guys, don't want to see them break below this $59, $58 area. Even if we do get early January profit taking, well, PayPal hasn't been really the benefactor of really much gains to the upside this year. As you can see, year-to-date basis, guys, we're still pretty much down 17% on the year. So shouldn't be much profit taking on PayPal. But if the broader market starts swinging down, I do expect PayPal to get caught in that as well. So keep an eye on this area, guys, 59 to 58 as future areas of support here. But if we do break to the upside, guys, this tightening range is still in motion as long as we don't crack this level 60.86, right? This low right here. Well, your tightening range could just tighten up a bit further and get a break to the upside. That is the bullish case scenario. At that point, I'd like to see the bulls really crack your $66 area of resistance, really take back an extra level and really set us on top of this weekly move a bit higher. That's pretty much everything I had for you guys in terms of the month, in terms of the technicals. Hope you enjoyed the monthly breakdowns as well. So summary, guys, is really we may be expecting some short-term pullback after 9 straight weeks of green. That could be completely normal early January profit taking, but as a whole, monthly charts are looking amazing for continuation into 2024. Macro is looking amazing as well. Now let's take a brief look into my portfolio. So guys, looking into my positions here, my portfolio performance, you can see that we ended the year very strong here, guys. 73.5% on the year. Very good, outperforming SPY by over 3 times pretty much. SPY ending pretty much 24% after today's red day. And so that is a 3x versus the SPY. Now versus the NASDAQ, we actually outperformed the NASDAQ as well. So you can see here ending 73%, 73.5%, and NASDAQ only ending up about 45% on the year. Very good year for the NASDAQ, one of the NASDAQ's record years, but we outperformed it without buying and holding any of big tech for extended periods of time. Very good. But there were a few mishaps in the portfolio over the course of the year here, guys. So as you can see, even myself, sometimes I get a little bit away from the strategy, which does lead to some extended drawdown periods. There were a couple periods of time that are all covered on the channel, by the way, and they were many and few and far between, but there were many. This was pretty much a position that I had opened in Tesla. I tried to basically play a little bit too much of Tesla here and ride it to the upside with covered calls all the way back up, but it did not really work out too great for me. So you can see that as of pretty much mid-April, that is this pretty much drawdown right here. And it took us a while. I was assigned other positions such as ASO, Academy Sports, which kind of trended to the downside as well. And before we were able to get back out of those, or for our break even pretty much, it did take quite a little bit of time. So this was this drawdown right here. Have to do better on that. This drawdown right here after July, pretty much, this is when we entered a few other trades. This is when we actually got assigned CSIQ. This is when we got assigned a few PayPal shares as well. And we had to pretty much ride those to the downside for a very long time here, guys, right? So this extended drawdown period is due for a couple bad trades and a couple bad trades that I had to close as well. I don't know if you guys remember, but one of my worst days this entire year was off the back of a company called C Limited. I should not have taken this trade. It was a very greedy trade in terms of the premium here, but you can see that we did get trapped pretty much on one of their earnings calls back here in early August here. And now we had to close the loss here pretty much down. It was a very, very big, brutal loss, very, very fast. And we had to close that position and move on to bigger and better things at that point. So positions, we were not immune to some losses over the course of the year. We were always transparent with them on the channel, and I was always telling you guys what the strategy was, how we were going to write more options to kind of come back from that. And all said and done here, guys, we've had a very beautiful end of the year indeed here. Most, if not all of our positions other than CSIQ and PayPal have come back. We've been able to get out of them at a profit here. So in the next year, guys, we will be once again laser focused on finding the best options premium here to run the options wheel. And I will have to do a little bit better on myself here. I got a little bit, one of the reasons here, guys, that we did have a few larger drawdowns than expected here, guys, is because I do have this now on the public channel, and I kind of wanted to impress you guys. I will be very forthcoming with that. Usually on a good year, guys, I will always be averaging between roughly 25 and about the 75% that you will see pretty much in this performance right here. So those are pretty much my annual returns in this trading account over the last couple of years. But however, once I started showcasing the portfolio in terms of a live view, I did want to show you guys just how juicy you could actually make this. And I started getting a little bit too greedy on my option selection. So that is my fault personally. And I do apologize for that on the channel. I really want to show you guys the more slow and consistent way to do things. So whenever we do get back to the slow and consistent way of doing things, guys, you can see that things usually always do pretty well. With a few assigned positions that I should not have gotten assigned on the first place, should not even have written those strikes in the first place. So in the next year, we will be running the strategy in a more conservative and a more predictable fashion indeed. And the gains should be substantial just the same here, guys. So that's a little bit of a explanation for you guys. As you guys can see, everybody has wins, everybody has losses. The most important thing is that you can learn from them and really fine tune your strategy. Even when you've somewhat perfected a strategy, guys, there's always some little fine tuning, always a little bit of psychology and mental endurance that you have to go through to really fine tune every single aspect of the strategy as well. And in terms of the positions here, guys, positions have done really good. We've rolled a few positions here, guys, for the week. So first position that we rolled are the CSIQ calls. You guys may remember that I had written some CSIQ 26 calls as of last week for about 40 cents. You can see that we rolled them end of the day here today. We bought them back for 35 cents. So we pocketed 5 cents from the previous week's roll here. And then we also wrote new ones for 85 cents for next week. So my true break even on CSIQ right now is all the way down to $27.18. So we will continue to try and roll the $26, $27 call area until we bring this break even down even further and start really getting profitable on the stock. We're very close, just not profitable as of yet. In terms of Palantir here, you can see Palantir, we got assigned 200 shares of Palantir here pretty much at about $18 a couple weeks back. And ever since then, we've been writing really twofold. We've been writing the 17.5s for a while, and we've been writing the $18 calls now for just this past week. So Palantir, you can see here that they ended below 18. So obviously I just get to keep that premium. My break even on those 200 shares of Palantir at $18 is now down to $17 34 cents. You can see it right here on the chart. These are the two premiums that I've locked in. So next week, I'll be looking to write some $18 calls as well. In terms of the 17.5s, Palantir, even though Palantir ended below 17.5, I actually closed them at a profit, guys. Didn't really want to get assigned, especially with how Palantir's chart's looking. Potential profit taking in early January. I like the company, but if I can get it for a cheaper price, that is what I'll do. So Palantir, we wrote pretty much, I don't think you can see them here on the chart here, guys. Unfortunately here, guys, it doesn't go back to last week, but last week we were able to write them for pretty much roughly around about 38 cents per contract here. So we closed those 38 cent contracts here at 20 cents today. So we were able to pocket 18 cents. 18 cents is really 1% in a week. So I was happy with that. Didn't want to ride it out to the end of the day. So we pretty much closed all those contracts at a nice little profit, just locked in some gains. We'll be looking to shop for some maybe 16.5s as of next week. If I can get a better price, lower my cost average here, I will definitely be doing that on Palantir. Now, moving on to Google. Google rolled the 141 calls again. So Google was a very juicy trade for me this week here, guys. So if you guys remember last week what we did with Google, Google was actually significantly above 141 as of last week. And we decided to roll the calls last Friday when it was about 142.70 on the end of the day here, guys. So you can see that our current break even on Google, I should have updated it, but I didn't. Our current break even with the call roll now should be in the 130s. I'll update that for next week's video, but it should be around the mid 130s because we got a very juicy roll this week here, guys. I'll explain. We rolled the premiums for about 8 cents up to the 141s. In terms of the total call premium that we had running right now, it was about $2.45. Well, those pretty much ended worthless. Since Google was trading around the 141 mark, I was able to close those for only 16 cents, guys. So we pocketed that entire rolled call premium, all of almost the $244, almost all pocketed here. So that came down to bring down my average. And we wrote new covered calls for next week, the same 141s for $1.49. So now my break even, guys, is really going to be low in the 130 area. I really love that. So we're going to stick with that for a bit longer here on Google. Trade Desk, I actually got assigned. I meant to close this one, guys, but kind of didn't really forget about it, but meant to watch it here, guys. And I got a bit taken away from my computer here for the last 20 minutes of trading. I was expecting it to close above 72, but in actuality, it actually took the last 15, 20 minutes of trading here and actually closed below 72. So we got assigned on Trade Desk, even though Trade Desk, we were pretty much, the premium was kind of out of the contract. I could have closed it for about 5 cents before the close, but we got assigned. So we will be assigned Trade Desk here at 72. We will be looking to write some covered calls or maybe even wait on that to write covered calls a little bit because I do believe in Trade Desk's ability to recover on the short term here. Still just looking for a weekly higher low, potential weekly trend reversal here. CSIQ, we covered those. Those are the close and roll. Google close and roll. These are just close. And as of the rest of the things, guys, everything is still pretty much the same, right? So still have all the swing trades in motion. Adobe, Amazon, TMF, Oracle, can't wait to get out of this Oracle position. I like the company. It's just been hovering around these prices forever. So I'd like to see a bit more price appreciation on them. ETH and Bitcoin haven't added to them yet. I'll let you guys know when I do. BABA still a bit out of covered call range territory here. My average on BABA, I'll remind you, is pretty much in the lower $80 mark. We got a nice little dividend here. So the true average cost of BABA is $79.85 after writing all of this premium. So we'll continue to write premium on BABA as well. Love the company in that area. CP struggling a little bit at the $79, $80 area. We're still in this trade as well. Google, we went over that. Nike, still not high enough for covered calls. Starbucks, still not high enough for covered calls. Palantir, have those 200 shares, right? PayPal, still not high enough for covered calls. Soon, CSIQ still in that, and my Canadian banking shares up $1 a share on 1,000 shares. So all in all, fairly good here, guys. Still swinging a lot of positions, but we'll be looking to really get out of those on our legs up here in the market. So looking forward to that. And now we do have a little bit more buying power for the next couple weeks if we do get a market dip. So that's pretty much everything I had for you guys today. Hope you guys had a great day, week, month of trading here, and I will see you in the new year at this point pretty much. If you liked the video, consider dropping a like, helps me out, and consider subscribing to the channel here. If you're new, we'd love to have you here. And as always, any questions, comments, concerns, leave them down below in the comments, and I'll be glad to answer you. Take care, guys. I'll probably make a video over the weekend here, some specific topic video, most likely on the option strategy that I'll be using for the forthcoming year. So take care, guys. I'll see you soon. Peace.